Dividend strategies continue to be a powerful tool for income-focused investors, and not just in Australia. Globally, companies with a strong track record of consistent and growing dividends are often seen as more resilient and disciplined. One index that captures this approach is the S&P World ex-Australia High Yield Dividend Aristocrats Select Index. Hello, I'm Andrew Geoghegan of ausbiz, and today we're taking a closer look at how this index works and what it offers investors seeking global income opportunities. And joining me is Jason Yee, Director of Factors and Dividends Indices at S&P Dow Jones Indices. So what are Dividend Aristocrats?
Dividend Aristocrats refer to a group of companies that have a demonstrated track record of growing dividends consecutively over a long period of time. Taking the S&P 500 Dividend Aristocrats Index, for example, so it contains companies that have grown dividends on a year-over-year basis for at least 25 consecutive years. So this multi-decade dividend growth commitment, it typically shows the robustness of the company's business model, the resilience of their financial performance across different business cycles, and the shareholder value generation over the long term. So at S&P Dow Jones Indices, we have offered a global suite of Dividend Aristocrats for more than 20 years. The number of years threshold varies depending on the index coverage, which is to balance the objective of the Dividend Aristocrats and the diversification considerations.
And why should Australian investors care about a global dividend index?
Yes, so the Global Dividend Index is important for Australia investors to be aware, mainly for three reasons. So first of all, Australia market has been one of the highest dividend yield market historically. However, over the past couple of years, the dividend yield level of the S&P ASX 200 has been trending down. So some of the equity markets outside of Australia, they are actually offering higher level of the dividend yield during the same period. Second, diversification of the income. So if you look at dividend composition in the developed markets, Australia only accounts for about 5%. So the total, the top regime that contribute to the total dividend income in the developed markets are the US, Europe, and Japan. Lastly, market participation for the income-focused investors. So a global dividend index could help market participants understand the potential routes to address some of the exposure towards the underlying market equity beta, which has relatively low correlation with the Australian market. And it also can maintain the objective of an income-focused strategy.
Tell us about the newly launched S&P World ex-Australia High Yield Dividend Aristocrat Select Index. What's the index about?
This index begins with the S&P developed BMI excluding Korea and Australia. And then after some basic size and liquidity screening, we require companies with at least 10 years of growing or maintaining dividends. In addition, we exclude companies with negative or more than 100% dividend payout ratio. This is to ensure that a company is paying dividends but not paying out all of its earnings. We also exclude companies with more than 10% dividend yield. So now comes the interesting part. So all of the stocks that pass the screens above, we assign them into one of the three regional groups, and that's based on the company's country of domicile. So North America, EMEA, and APAC, as well as one of the four sector groups, and that's based on the GICS sector classifications. So Group 1 includes financials and real estate. Group 2 includes consumer discretionary, consumer staples, and healthcare. Group 3 includes information technology and communication service. Group 4 includes industrials, materials, energy, and utilities. So as a result of this, we formed 12 subgroups using this regional and sector approach. And then within each of subgroups, we sorted stocks based on the float market cap times the dividend yield. We select the top 20% stocks to form the final basket. And the constituents are then weighted by the float market cap times the dividend yield, subject to a 6% single stock capping. Lastly, we rescale the final basket's regional and sector weights back to the parent, so back to the same as the index starting universe.
Now, this sounds like a quite complex index design. What are some of the rationales behind the approach?
So this is a bit not that typical dividend index that most of the Australian market participants might be familiar with. So there are a few key aspects that we consider when designing this index. So the index focuses on the long-term sustainable dividend growth rather than the purely selecting highest dividend yield companies from the global equity market. Also, I spoke about the merits of Dividend Aristocrats approach. This is a very different angle from the high dividend yield approach. So the reason why we create this sector and regional groups was to find a more balanced approach in stock selection and the constituents weighting. So you can think of a sector region neutral approach. So a typical high dividend yield selection would result in strong overweight towards high dividend yield sectors like financials, real estate, utilities, and also from the regional perspective, it underweights countries like the US because the US market has a relatively high valuation and low dividend yield. So by this sector region group approach, we can select companies with high dividend, but within those groups. So this would lead to less sector region deviation and also making the index more balanced in sector regional weights compared to the benchmark with the lower tracking error too. And in addition, I introduced the float market cap component in the selection and the weighting, and this is also to acknowledge the large cap companies' contribution in the global pool of the dividends. Ultimately, so the purpose of the index design is to measure the performance of a group of companies with sustainable dividend payments outside of the Australian market while maintaining a relatively low tracking error against the underlying broad market performance.
Jason, thanks again for joining us today. To learn more about the S&P World ex-Australia High Yield Dividend Aristocrat Select Index, please visit the link below.